Before jumping into the discussion, David, I would like maybe to expose a little bit of your experience and achievements that you have done so far to our audience. Can you give us a brief, maybe, story of your life and achievements?
My background in financial services, bizarrely, I'll be honest with you, never meant to do financial services. Was not, as a child, was not the thing I looked at and was like, do you know what? I really want to be a banker. Not for me, But my background, I played a lot of sports. I did. I think it was something like 11 county sports, athletics and rugby and all sorts of stuff. Basketball, though, was my absolute love. So playing loads of basketball, doing that to a really good degree. Unfortunately, tore all 3 ligaments in my left knee. And I remember very vividly my dad going, you're going to have to get a proper job now, aren't you? Unfortunately. So yeah, I kind of went from basketball to financial services and computing. That was my sort of transition. My dad gave me a stack of papers and basically said, pick an industry that'll still be broken when you come out of education. And financial services looked like it had a long way to go, But it's funny, actually. I mean, I sort of feel like a lot of the stuff that I bring to business is probably due to being good at team sports. Actually there's a certain sharpness people have around being able to sort of give and take feedback, and the pursuit of improvement is is just part of the DNA of being a good sports person. So, and actually sacrifice as well, being able to put above everything else the pursuit of an achievement that you want to make. So, but yeah, with that sort of slightly strange pivot, then I ended up running the digital transformation program for a big insurance company. I left that in 2008 to go into banking, which was both an amazing time to do it, and for anybody who's good with history, the sort of start of the financial crisis in 2008, that was weird. Managed to convince the board of a big UK bank that this whole digital thing is going to be a thing, and led and structured out their transformation program, which was pretty amazing. After that, I went and ran the digital banking practice for a big Indian offshoring company, and then actually wanted to sort of complete the circle and go and build and run the global digital banking capability for a big management consultancy. So I've done the sort of in the bank bit. I've done the shiny suits management consultants part, and I've seen it from a big Indian infrastructure player as well. So last 10 years I've been running a company called 11FS, and goodness, I think we've built 12 banks all around the world, which has been pretty cool. So it's been an amazing journey. I feel like I've blinked about 5 times and suddenly 10 years have gone by, and 11FS is 10, but we've had a hell of a lot of fun doing it as well.
It's 3 minutes into the podcast, but you're already breaking the takeaways. So I think that having an experience in other industries, and in this case, it's kind of the sport, usually that you can connect backward as a dots and bring something that industry doesn't have or is not focusing enough. And being the team player, and I really love this saying that no one cares how you played, but everyone cares what is the score on the table. And actually, it's a lot overlaps with the banks. So no one cares how much efforts you put, but everyone see and feel what are the results that the bank is bringing. So thank you for this analogy and highlighting the transition into the sport and having an ability to play. So in this case, I would like to jump into maybe your founding experience, because a lot of people, they understand and then they have the knowledge switching the companies, maybe shifting from one to another, then to high street banks. But what was the trigger for you to found the company? Because it's totally different journey, taking accountability, making sure that it works. And no one can tell you what is the right way, because there are millions and millions of the ways how to do the things. So what triggered it?
It is a strange decision. And actually, I feel very privileged to have worked in some amazing organizations, to have captured experience, to feel maybe dumb enough to think that I could go and do it, so confidence is an important factor in that, in its own right. But I think the interesting challenge there is I think everybody in their career sets objectives for themselves, and often the achievement of those objectives can feel euphoric, and that's fantastic. But often you sort of realize when you get to the peak of whatever mountain you're pursuing, that actually the thing you were pursuing was probably not the thing that you wanted. And I sort of feel that quite vividly. I remember running Gartner's global digital banking capability, and ringing my mum and ringing my wife and being like, I don't think that I want to do this anymore. Do you know what I mean? And actually, I think I can probably do this better myself. So I'm probably going to quit, and I'm probably going to go and give that a go. And it's you feel slightly like you're giving up on something that you've worked really hard to achieve, but equally, there's no substitute for being your own boss, And I don't mean that in a sense of being in charge or, being, everybody thinks being an entrepreneur is like, pulling Steve Jobs quotes out thin air and, being Elon Musk or whatever, but it's not that. It's like, if you're the type of person who's in the room who is setting the pace, that actually, you're doing actions before people are able to write them down. You're moving things forwards. You've got a bias towards action. Then being an entrepreneur is good for you, because essentially you can move quickly, you can make things happen, you can impact things in a way that other people can't do. But that's not for everybody, so kind of knowing yourself and knowing your skill sets and knowing, what gets you jumping out of bed every day. That's the critical thing. And I'll be honest with you, I've always been bad at conforming. It didn't matter if it was high school or Cub Scouts, try and make me be like everybody else. And that is like the herd for me, so being able to kind of pursue something else and really give it some personality. I think it's exciting and terrifying at the same time. And don't get me wrong, again, that, running a business for 10 years, it's been some amazing highs, but it's been some horrendous times as well, and actually you've got to be a type of person who can kind of deal with the highs and, not get too kind of high on your own supply, but equally be able to deal with the lows and be able to be an operator and make things happen. I wouldn't change it for anything, but equally, I wouldn't have done it without all of the experience that I gained from all of the companies that I was super lucky to work at. And, I think my advice always to people is like, go work at places where things are crazy. Because if you go into an organization where everything is perfect and everybody is, doing an amazing job, then what do you learn and where's the opportunity for you? Joining a big bank in 2008 when the world was melting, I learned way more and got way more opportunities because, while everybody else was freaking out, then I was like, putting my hands up for stuff that I probably wasn't capable of doing, but figured it out, So, I really do think it's a, seek opportunity. I think it's Richard Branson who always said, if you're given a crazy opportunity, the answer is yes, and then you figure it out, right? And, very much that's how I've kind of lived my life.
One comment from my side, and then I think Dumitru will have questions. But what I feel, and I saw before, that the best ideas are formed between the market state disaster to bad. And we talked with Lexicol, and he also jumped into the kind of entrepreneurship mode after the meltdown in 2008. It affected a lot of industries, not just the banking, but banking was the core that actually is melted, and we had to kind of rebuild what we have around us. So I think that that's another takeaway, that if you think that you need to kind of be stable and follow the same process when everything is in disaster, those times actually bringing and shifting the total difference, like how we operate, how we think about the things. And that's a good moment maybe to reflect and say, do I want to go this way? Or I have an energy and accountability to start something to prove that this change will survive and will bring the additional value for the people. So,
David, you mentioned at the beginning that your father just told you a very wise thing, like, hey, choose an industry which has a lot of things, a lot of potential, and still is broke. In the last 10 years plus, the years before you joined this path of entrepreneurship, I think you saw with your own eyes, being very much implicated, you saw how things changed, how appeared digital banks, how banks, classical bank, digitalized. So can you tell from your perspective, from linked to what you are doing, linked to your business, linked to your experience, how was this the last 10 or 15 years for banks, for fintech and financial services? How they evolved for you specifically, how they changed your life, and also how they changed the life of your business and entrepreneurship in general?
It's an interesting journey, isn't it? I think every sort of new form factor, and digital has been a revolution or a sort of a revelation, depending on sort of where you've started from, and actually, you kind of see every form factor gets impacted by, new changes in standards or technology or, capabilities from an infrastructural perspective. But often what you sort of find is any of those industries, they resist that change for as long as they possibly can do, right? Because, not for nothing, because actually they make an insane amount of money out of the way that things are, right? So, the people who sold horses thought cars wouldn't catch on, you know what I mean? Like, so I sort of feel like actually that's where it takes a little bit of foresight. It takes the ability to see sort of evolution happening in front of your eyes, even though the change is glacial. Then actually, the impact is really significant. So, and actually, that's where I've always kind of found actually the difficulty really is that big organizations are established for yesterday, because actually what made them big was success in the previous way of doing things. Banking has sort of created and ossified around a model that made them amazingly successful for the last 250 years. And there's fundamental building blocks of the industry that actually are not questioned because they just are the way that they are. Insurance is a really good example of this. Is like, insurance policies are a year long, not because that's how long they should be, but because it used to be a bit of paper and it was a pain in the ass to like travel for like 7 hours to the next place where the certificates were ratified to get the next one, So actually they're that long because pieces of paper and distances to travel were painful. It's the old story of like, why are the roads the width that they are? Do you know this? The roads around the world are the width that they are because of the width of 2 horses' backsides, because that was the width of a cart to be able to pull down it. So like, in the 2025, and beyond, like we are still, having that yardstick as a measure, and that's why cars are the width that they are now. And so you sort of find this weird sort of connection between dots that actually show the previous form factors inhibit the new ones in such dramatic ways. So, and actually, when you look at things like digital banking, actually, that's kind of what's happened. Nobody really got into a digital strategy or digital banking because it was any real benefit to the customer. Like, and actually, they try and retrofit a customer story now, but actually the reality was it was about taking people and paper and, buildings out of the equation. So, digital really was a cost saving. It wasn't really about any experiential benefit. And it's only the real advancements that we're seeing now, starting actually from first principle. They're starting from what could financial services really be, that are then establishing infrastructure and levels of service to customers that are just light years ahead of really where they are. So we're in a funny place right now. The industry kind of looks sort of similar, but actually at the same time, you're starting to see metrics within those organizations, customer satisfaction levels just fundamentally flip on its head. And that's really exciting because actually it kind of means all of the really exciting stuff is just really around the corner.
I really like your reference to Noel Harari, Sapiens, the book. So you can read more about the roads, horses, and then the roads there. And in this case, the last part was about customer-centric service. I think the flip was around business-centric, like we are providing you the financial services. And how do you feel when you're getting those services? I think our listeners will not forgive me if I will not ask about new form factor, because web banking took, I don't know, almost 10, 15 years to get into the place. And then the speed with the mobile engineering and mobile platform actually was like 5 years, because everyone started to do digital applications for iOS, Android around 2014. And then in kind of 5 years, everyone is using mobile devices. But what is your vision? And are you defining AI, ChatGPT, agentic as a new form factor? Because it will not sit in other types of the device, but is it a new way? How do we interact with the banks?
Yeah. So I think the bit that people sort of, and it's always good to kind of look back on the evolutionary steps. So like when I was at Lloyds Banking Group, I did the first mobile banking strategy. So, and actually determining what mobile was as much about determining the operating model around creating those types of services as it was what it is for consumers, if that makes sense. And often what you sort of miss in the provision of these types of services, and it's, I completely agree, you're using the word service. Actually, the irony of it being called financial services, most people still think about products rather than services. And we'll sort of get into that distinction, as we sort of go through this conversation, but it's sort of fundamental to the entirety of the argument about what is digital banking really. But the sort of challenge with internet banking was basically kind of an interface stuck on the top of things that were probably created for call centers or bank tellers. And actually what needed to change when you started to look at the creation of native mobile banking was fundamentally, suddenly people were talking about APIs, and suddenly they were talking about the ways to create native experiences for different types of endpoints, not just for a browser, and actually, when Internet Explorer was dominating everything and everybody was just optimizing for IE6 at the time or whatever, then actually, for me it was the great thing about mobile banking was it forced us to focus on the way in which the services are constructed from a operating model within the organization versus just the endpoints in the customer experience. And the reason that that's great is because actually many global banking capabilities that were built for mobile, actually people then start to build all the other touch points on top of the mobile infrastructure and mobile capability, because actually what they found is it was an operating model, and if you fast forward to all the way through to today, actually, the exciting thing around, we'll come back and unpack this, I'm sure, but the exciting thing really is like, the way that banks become broken is by spending more time on strategy than execution. And actually, if you look at what is the core differentiator between, brilliant fintechs that scale globally, like a Revolut, and gigantic banks that are established in all of the same countries, is one of them, the unit economics around creation of software and the speed that it can happen, and the deployment and the testing and the automation around all of those things is fundamentally different to the other. And actually, that for me is sort of the difference between organizations that are born digital versus ones that are trying to adapt and adopt digital practices. To sort of come back to your point around, agentic and AI and blah, 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 I always kind of think actually really like new expectations, like we talked about with mobile banking at the front end, only really just exacerbate the problems that everybody has on the back end. And actually, if you kind of look at the, should artificial intelligence and chat-based interfaces and agentic AI pose like real concerns to financial services organizations who have great infrastructure in place? No. Because essentially, actually, if you've got non-monolithic structures and you've got data that can move across those channels, and you've got intelligent digital services that actually can run across all of these things, you've got more like services across them for identity and KYC and all of these things, then actually it's not a problem. But the reality is 99% of financial services all around the world do not have those things. So, but that in fundamental terms is where Revolut or Monzo or Chime or whoever, like, they've built their infrastructure and their technology, and their people have operational capabilities to deploy those things, and I sort of say it, it doesn't matter if it's a mobile interface or a chat interface, or we're beaming people's balances into their brains from space. Like, actually, it's just an endpoint, it's just a service that's being consumed from great infrastructure. But if you've got bad infrastructure, you got no chance. So yeah, I think weirdly, they say beauty is only skin deep. I think great experiences go a lot deeper, because actually, in the world of things are changing and people are expecting interactions in real time, then actually, if your infrastructure isn't capable of actually supporting the services you want to deliver, you're really in trouble right now.
Let's a little bit dig into this topic, but we will take an example of also you mentioned internet banking application. So internet banking, we'll try to explain this difference, but with using the internet banking example. So internet banking is a product or it's a service, and no matter it's a product or a service, what are the metrics that can be considered that this service or product is a successful one in digitalization, or in making people closer to a digital product, digital service?
It's a good argument. Is internet banking service or a product? Like, I'd argue that I think the banks have become incredibly successful by understanding product features. And that's not product in the product sense of product management. It's product management in the sense of financial instruments. So they're really great at understanding how interchange creates business models, or they're really great at understanding how to appear at a higher level by tweaking interest rates on mortgages to increase that. But what they're terrible at doing is creating services that actually help people use those things. And the weird thing is like actually through, the promise of the internet was actually using data to create one-to-one experiences, and my internet and your internet and everybody's internet is different because of these amazing supercomputers that can basically customize all of these things to everybody, right? That didn't happen. Do you know what I mean? Like, your mobile banking and my mobile banking look exactly the same, despite you and me and like my, I've got 2 kids and 2 dogs and a wife and like there's nothing bespoke to me, right? This is what people do really well. Like human interfaces are great at dealing with these things. And that's what we used to have in the branches. We used to have deeply empathetic people who could break down incredibly complex financial terms, navigating across the monolithic structures that are created for like savings or credit or overdrafts or add it to your mortgage or whatever, like, to help people break down these complex things, understanding what their problems were and, and really getting to know them and their family to make sure that they are served, like, so. And what do we have today? Like you've got a list of credit cards to pick from, or a comparison website that gives you a fluffy toy for picking your insurance through those guys. Like it's like that level of service for me is the bit that is fundamentally missing. And actually, if you look from a consumer perspective, it's like everybody's petrified of like mis-selling a product. But the regulator's trying to push everybody to, treat customers fairly and, have the sort of, best intentions for what they're doing. But equally, they're regulating advice to be almost impossible for anybody to really do at any, consistency or any scale. It's like customers arguably have got a much worse experience now, and financial education is at an all-time low, and actually like quality of time to do any of these things or, understanding. So like, shit, like, is self-service really what we wanted? Like, is that, do you know what I mean? Like, what am I doing next? Am I going to go to Burger King and cook my own burger? It's like, but so financial services is so critical, so infrastructural to society. And actually, it just feels like we're in a bad place, so I argue really, which is like, I think the service is an all-time low, like that really sucks. And really, actually, if you look at some of the fintechs, it's taken tiny amounts of, you've got banks who talk to people like, okay, well, the APR is this, and here's all the small print, and here's the fast talking at the end of the radio advert to explain all of the terms and conditions. And it's like, do people really understand what they're buying? It's taken fintechs just to talk to people like normal people in order to be able to get even the tiniest amount of cut through and then acquire millions of customers for it. I joke often, like some of the communication I get through from traditional banks is like, it's like hate mail. Do you know what I mean? Like the text message you get in all caps telling me about this thing. It's like, if that was a friend of mine sending me messages in that way, I probably won't be friends with those people anymore, So actually, it all leads to trust being eroded in traditional financial services pieces. And do you know what? I think trust is actually a really interesting thing. It's like, people sort of say, but, do they trust fintechs and, brands that have not been around a lot of time? Yeah, but there's been like mis-selling scandals where you've been fined millions and millions of pounds. Like, what do you, like, I think that people trust big banks not to disappear, but I think they trust financial service, fintech organizations to do the right thing for them. And that's a very different positioning place to start building from.
While you were highlighting all those things, I was thinking, like, is it happening because developers or engineers are taking over? Because if we take a look on the financial industry, as you rightly said, the last mile was delivered by people, like human to human communication. And that thing has been cut, because right now you're facing your bank 99% through the application, which is built by engineers. Do the bank, they have an idea or at least the need to think about this last mile in more empathetic way, that when I'm talking with Igor, I'm not talking with Igor, but not a framed customer audience who is falling into the age from 35 to 45 and he has an income X. Because I feel that a lot of services, they are more machine communication because it was designed by the engineers rather than thinking about the customers as a humans. Do they have this need or feeling of this need?
I think it goes back to what I said earlier on. I think it's, I don't think it's the engineer's fault. I think it's actually the business case. So, if you kind of look at any interface that's been created in the last, 10 years by big bank, then actually its focus is often replicating the existing form factor that was paper. It's about removing the paper and the cost of doing those things. If you look at internet banking, it was just statements online, right? First factor of mobile banking was just statements on a tiny screen, right? So actually all they're doing is taking the fields that I used to rub a pen on and putting them on a website or putting on them on a mobile site. So, and that sort of digitization of the previous form factor, as we discussed earlier on, is not really leading to great experiences, because fundamentally what digital can do is so far beyond what paper can do. Back to my point earlier on around, an insurance policy is 12 months because of the piece of paper and the stamp that was required from town 10 over. We say digital is a form that is, we talk about digital riches. So it's real time, it's intelligent, it's contextual, it's human, it's extendable, and it's social. So, is that piece of paper for a 12-month policy real time? No, it's not. If we made insurance policies real time, how would that fundamentally change what people would do? Well, actually, if you're about to take, some risk, then actually I can turn insurance on, but I can turn insurance off if I don't need it. How does that change the context of the way in which you provide that service? If it is a service that's contextually aware, then actually, if I'm applying for a loan at 4 a.m. in the morning versus 4 p.m. on a Sunday, actually that context is really important. The behavior of a customer doing it at 4 a.m. is showing a very different pattern of behavior than one at 4 p.m., right? The context of actually knowing, that I'm flying out to Lisbon next week. Monday, I'm in Lisbon. When I land, my bank knows that. Then actually the context of the services that I'm likely to need are fundamentally different to the one that I would need if I'm in London or if I'm at my house, So we have all of these capabilities. We have the intelligence, we've got the technology, we have the ability to augment these experiences now. But actually, it's just not there yet. But this is definitely where we're going.
And thank you for the analogy for the contextual, because while you've been talking about that, I remember the case with the bank, which is specifically declining all high risk transactions for the card from the midnight till 6 a.m. So they know there are a lot of gamblers who are super intuitively doing this at night, and they not allow this activity. So they're trying to help the customer in more contextual thing. That's a really great insight. I'm already out of the points or numbers for all the insights.
When I asked you to define if internet banking, that old internet banking, and why not even current one, it's a service as a product, you gave a very interesting perspective. In fact, that basically because we don't need to go for insurance paper once in a year to another city, because we are working in our browser, we're doing the statements, the operations in our browser or in our terminal, mobile terminal. We are losing a little bit. And the example of Burger King, a self-making burger at Burger King, it means that we are shifting from the physical contact with a broker, with an operator. And by the way, I think the financial, I'm very open for digitalization, but I think that because in the past we had to pass to make some, 20 kilometers to the closest town to discuss with the broker about an insurance. Basically, because of this, we were in situation to learn ourselves, to taught ourselves about the financial instruments, because we could not accept the idea that we will come in front of this broker and pretend and be dumb, not knowing about the product itself. So we had more, and by the way, we had much more time to learn about these things because things were slower than today. I think the absence of financial culture is even personal financial culture, how to spend your personal money, is because everything is in a hurry and everything can be accessed from one single device, like right now. Coming back to what we were discussing.
Can I jump in on that? Because I think it's a really good point. Because I think the interesting thing on that is why is so my I remember when I was little, the guy with the briefcase who'd turn up to talk to my dad, right? And exactly as you say, I remember my dad sitting down in front of CFAX and trying to kind of get ahead to understand, what has performed in what way and what's the market's done, and that painstaking, God damn it, we're on page 34. We've got to wait all the way through to page 8 again to see it. And it, so I think people have done that all the way through. Like nobody. I sort of joke with people. We're building something in the wealth space now, and I'm like, look, just because you got a lot of money doesn't mean you're good with it. Do you know what I mean? Like actually, people with the largest amount of money have the lowest financial education sometimes, just because of how they've come across the money. Do you know what I mean? And actually, being in a situation where nobody wants to look stupid, and actually, that I think that's almost the way that it became, which was the service that was there in branches was about helping people. And then actually over time, people became risk. So actually the branch manager's job was to manage risk and not manage people. And actually that's why they became really good at financial products. They became good at understanding risk and managing risk and, spreading that risk over broad areas. And if you look at any time financial services has really got itself into trouble, it's because people have become blasé about managing risk, whether it was 2008 or whatever financial crisis you want to look at. It's where people have ignored the warnings of larger risk bubbling up, and then people have tried to exploit it, and bang, away we go, right? But I personally think it's our whole personal agenda with 11FS is like putting services back into financial services, because actually it's not having the product, it's owning the product. It's what it does for you on a day-to-day basis, which for me the flip that's happened in that is that to your point of the 24/7 nature of all of these things that are happening there, then actually the real-time nature of financial services now means it is more of a service now than it has ever been. Because actually your transactions work whenever. You can access your bank whenever. You can access this information. You should be able to do it in the way you want to do it, wherever you are in the world, whenever you want to. So yeah, no longer is it about needing to go to that branch to talk to your branch manager. But equally, no longer is it just the skill sets within that physical building that actually are the things that should be the inhibitor. Do you know what I mean? So for me, it's like, I don't want to talk to like just the mortgage specialist in that branch. I want to talk to the best mortgage specialist, because actually wherever I am in the world, why can't they put those things at my fingertips, given this is at my fingertips, my phone is at my fingertips all of the time, And then actually, if you start thinking that way, then actually scale is not really a massive advantage for a financial services organization, because it doesn't really matter, And really the job of that organization is about tailoring experiences to serve you as an individual, because if they don't do it, somebody else is going to do it. And if somebody else does it better than they do, then essentially they just become commoditized into becoming financial instrument providers. And actually, any industry that we've looked at where that happens, it's just never a good idea. Like if you look at the M&Os, 10 years, 20 years ago, like Vodafone was like king of the world, like absolute king of the world. I don't give a damn what kind of logos in the corner of my iPhone anymore. I just care that I've got an iPhone, right? So actually when you get into an industry that commoditizes itself around price in a way that mobile network operators did, or banks have done, through being so focused on product features and not the service that comes around it, then everybody becomes price sensitive and everybody becomes commoditized. And, the only industries that really work well when you're being commoditized are one who are really, really efficient in the back office at controlling cost, and when every bank costs billions of pounds to keep the lights on every year from a technology perspective, then this is definitely not something that they're very good at doing.
By the way, everything we were discussing about going to the branch, speaking with a manager, speaking with the best manager, currently this is a part of premium service, of premium banking services. It's a sign that these core services are still good and they are requested by the market. But for general perspective, for the entire business, for mass market banking, the core banking services, are they outdated already? So we need to shift to something new, or there's still a place that possibly these core services will return back and be, in glory and force.
I think the great thing about mass market is the future is already clear. Do you know what I mean? Like actually in any industry that happens, right? Like I look at, 30 years ago, us three wouldn't be able to just go jump on a plane and fly to Paris and hang out for the weekend. Do you know what I mean? That was something that was sort of restricted to the ultra high net worth, right? The idea that actually a man in a car would turn up to your house and drive you to wherever you wanted to and drop you off. Well, that's a chauffeur, right? Like that was something that not long ago was was kind of very reserved for the ultra high net worth, right? So, and I'm describing like EasyJet and Uber, today. So, ultra high net worth experiences become commoditized into mass market really, really quickly. In the way that actually, to start with, ABS brakes on cars were like crazy expensive, and now they're just the standard, right? So I think mass market experience is already here. Just look at the things that ultra high net worth individuals have got, and then fast forward 15 years. So what that means for me, and actually, if you look at some of the stuff that we've built as 11FS, actually, Metal in the UK was about having a finance director in your pocket. It wasn't about having a business bank. It was about being able to help entrepreneurs sleep better at night, because essentially the organization is using its experience and expertise in order to solve problems for you, not just surface them. So, and actually, if you look at really where retail banking should be going, it's like private banking for the mass market. Actually, if you can take the comfort and the confidence that is brought by having a team of people look after your finances, then actually, if friggin' Tesla can drive itself, then why can't algorithms manage my money for me? So yeah, I think the mass market one is there. Actually, I think the future of high net worth experiences becomes more complicated, because that's really where true innovation happens, ahead of it being commoditized and democratized to a broader audience.
One of the topics that we want to discuss is core banking, because people are maybe missing that all those banks, human-driven, non-human-driven, are actually built on top of the infrastructure, which is called core banking. It's like keeping the knowledge about what is your balance, what is the cash flow, how it works. And taking into account whatever we talk today, like customer-centric, is it really affecting how the product and service is then rendered to the customer, or it just the piece of the software which is commoditized, can be built in-house, or I don't know, bought, acquired, whatever? Is it still an essential thing? Because 10 years ago, if you build in a bank and you don't have a core banking, you're not building a bank. So what do you think about that?
I sort of thinking, so one of the things that I looked at a lot when I was at Gartner was core banking systems, like, and actually like the core banking technology, that the infrastructure that was kind of built around those things. I think it's probably the best example of digitization that there is, really. Because everybody calls it core banking, but it's like ledger. It's a ledger system. Like the ledger system used to be a bloody great big book in the back of a bank where you wrote down incomings and outgoings of like, a ledger transaction, right? And then so they've sort of taken a big book and made it a big system. I think the challenge with all of the things that we've been discussing, that transition from the physical world to the digitized world, didn't happen in one go. It didn't happen. It wasn't that we're going to digitize. Okay, we're going to digitize our bank. We're going to do it all. We're going to move it into this new world, and away we go. What happened was, because of the focus on products within those organizations and the P&L structures within those organizations, the budgets to do these things was very monolithic. And actually what that led to was the creation of credit card systems and savings systems and business banking systems and current account systems, and that list could go on for like the rest of this show, right? So the world that many banks live in is, they don't actually have a core banking problem. They have a core bankings problem. If you look at some of the biggest banks around the world, they've got like 87 core bank systems implemented, and they've probably got 15 different know your customer processes and systems and technology. So the idea of doing any of these things where you've got every bank on the planet has a single view of customer projects that will never ever end. Like they'll just give up at some point because it's just too damn hard. So the challenge with all of that is like technology has moved far quicker than any of those organizations' transformation programs could ever move. And this is often the argument we go and speak to bank boards all around the world. It's like, look, the question you got to ask yourself is it going to be easier for you to iterate from being analog to being digital, as opposed to building something digital? And actually, that really gets to the heart of the problem that they're facing into, which is, look, you're spending loads and loads of CapEx every year, and all you're doing is layering on more OpEx every year. So actually, the millstone around all of their neck is the technology debt that they're carrying with them, and their ability to do anything about it becomes harder and harder every year that passes, and they just keep layering on more stuff. If you look at what we were talking about right at the top of the show with, mobile banking being a bit of an operating model revolution as much as an experiential one, then, mobile banking was built on top of a stack that exposed some APIs, that reached down to core primitives in like 87 different systems across a gigantic but some of that stuff was tied together with like sticky plastic and, rubber bands, you know what I mean? So why are we surprised in the world that we live in where, every 3 weeks there's an article on the BBC of like big bank X falls down because of this, it's like, yeah, I'm not really that surprised, The challenge really is, if I'm honest with you, is not do banks have a problem with their core banking system. The challenge actually is how the hell do you do anything about it? Because, nobody elects for heart surgery, right? Nobody's like, yeah, just cut me open and see what happens. And, let's maybe stick in a new one if you think it's like, no, people wait until they have a heart attack, right? And actually, if you look around the world, the banks that maybe have, and I'm thinking about something like Danske Bank, like had a, major problem, and, NatWest had like a major problem. But actually, do you know what? That forced them to really take it seriously and do something about it. And I think have kind of come out the other side in a better way, But no doubt, actually, in the same way, like if you think about all the banks built a lot of their core infrastructure in the 60s, we're talking about, times that computers were gigantic frigging tape deck things that took up, an entire floor of the building. Then actually, when you look at what the advancements around technology and the way in which you'd create infrastructure today, and cloud-based, Kubernetes-based, event-driven architecture, it's a fundamentally different world that we operate in today. My argument is always like, look, it's like a really old person trying to live forever. I mean, it's like Dracula. Like the only way you like occasionally just like drinking blood of the young. It's like every time they try and deploy some new technology, it's like drinking blood of the young. When actually what you realize is like the way you are passing things through to generations are via DNA, so actually every so often we've got to give birth to new things in order for those new things to become the things. So for me, the argument around sort of core infrastructure is about core architecture more broadly. And the core architecture more broadly piece, I think, leads to a debate around really what's the purpose of technology in organizations. And the purpose of technology in organizations is A, to be reliable, but B, to make change happen quickly and cost effectively. So, if you look at what we said of a Monzo or of a Revolut, I mean, they can build software and, have it in the hands of customers quicker than big organizations can schedule the meeting to talk about what the requirements are, right? And because of that, that's because of their DNA. That's because of them being born into the digital world. It's because their core infrastructure is set for today. It allows them to look across data sets and do things in fundamentally different ways. It does, automated testing structures. It has disaster recovery systems. That means, you could kick the whole thing down and it would be back up in, 45 seconds, and it's like, that's just crazy. That's just not the world that big banks live in. But it's sort of like that Conway's Law thing. I think because of the fragility and the fear around the core infrastructure and the technology, well, then you've had to build insane systems and procedures and governance and strategies. And and if you look, you've got companies like McKinsey preying on this, where actually, look, if you're terrified that the change might be wrong and it takes you 2 years to do it, then yeah, I'll spend 10 million pounds on some strategy, because if you can help me be slightly less wrong, then it's probably worth doing. But when you live in a world where you can sort of on Tuesday decide you want to do a thing and talk to some customers and have it in their hands by Friday, then you spend more time on execution than you do on strategy.
In this case, important maybe angle that usually digital banks, they have A/B testing. So if we made the decision that doesn't work, we will know by reality, but not guessing. And I think sometimes the inertia of thinking is not helping high street banks to make the decision, because they're not thinking, okay, I might be wrong, but I will do and I will check that actually it works this way. They spending too much thinking, then when they finish thinking, it's already outdated. And when it's delivered, it's like 5 years out of the water is under the bridge.
100%. Yeah, I mean, if you might be the best strategist in the entirety of the world, but if it takes you 2 years to execute, then somebody else has probably already stole the march on you already, right? And then what's the point? Like, what are you if your strategy is to be a fast follower and you can not fast follow, like, then you're really in trouble at that point, aren't you?
I'm usually going like this. What is the question that we didn't ask today?
Do you know what? I think the thing that people forget in all of this stuff, if I'm honest with you, is like technology is super important. Don't get me wrong, and actually like strategy is super important. But actually, like, all of these organizations are just sort of people, like, and actually for me, like the the culture of organizations. It's been a real privilege actually to work in so many different banks, you know, that have fundamentally different cultures to them. And actually, the culture of an organization is fundamentally the thing that will make things happen or stop things happening. And it's weird, you know, it really is weird. Like if you kind of think about a group of people with a different badge on it and different permissions can act in fundamentally different ways than one with, you know, another group and another badge, you know, and it's like, but I think the hard thing is actually getting those things changed. The technology is actually relatively sensible. You know, it's new to financial services, but it's not new to other industries. So, like, you know, learn from people who have done this better would be the advice on those things. When it comes to the sort of who we are and what we stand for and what we accept, and the, you know, that's really difficult. You know, I mean, because actually, you know, with everything that we're referring to about speed of change, with that speed of change comes a dissemination of decision making to the edges. You know, you can't have command and control structures in organizations when you need product managers to make decisions every day about what you're doing and what you're building and where you're going. Almost the biggest shift in all of these organizations is a fundamental one of what is leadership there to do, and actually what do you stand for and who do you stand with. And I, you know, I think we could probably speak for another 5 hours on that topic, but we probably better wrap up, eh?
Yeah, the time flies by. Like initially we thought, okay, 30, 40 minutes, but it's definitely worse to continue. And I feel that we are discussing the real essence, because a lot of people are putting, stable coins, like, but that's not what is making the financial service. And you have really unique perspective and experience, which I think super valuable.